The pound has come a long way since the lows in September, but is it going to be able to keep up the momentum against the US dollar? Hello and welcome back to our channel. My name is Daniela Hathorn from Capital.com, and in today's video we are going to be looking at the pound, specifically the pound against the US dollar, to see how the pair has been performing lately. But also we've had some interesting data out in the last week. We had the Fed minutes yesterday, so we're going to be going over that, and also some fundamentals relating to the pound. But of course, before we get into it, please like this video, comment, subscribe, and turn on your notifications if you want to be kept up to date on all the latest content we post. Right, so the pound against the US dollar, we have seen a significant rally over the last few weeks. A lot of this has been on the back of that dollar weakness. Now, remember, not to be repetitive, but of course, the trade in the market seems to have gone one way for the last 2-3 weeks, and that is, of course, shorting the dollar and buying everything else pretty much, especially that risk on sentiment. And that is on the back of those expectations that the Fed will pivot sooner rather than later, and it's going to start to turn dovish given the economic playing field. Now, remember, we had the US CPI and US PPI below expectations for the last month, and also the unemployment rate creeping up. So that was the fuel to add to the fire. That is what got that weakness in the dollar really going and allowed that rally in the pound against the US dollar. Now, yesterday we had the Fed meeting minutes from the last meeting, and we did get a little bit of a dovish tilt from there. Now, I just quickly want to read out a few things, but the key takeaway is that there is a substantial majority of Fed members that believe that they are likely soon to be appropriate to start slowing rates and even stopping rates. So it seems the feeling we're getting from that those meeting minutes is that Powell's stance is actually not the majority of the members, especially the voting members. Remember, after the meeting at the beginning of November, Powell reiterating that inflation was still a threat to the economy, and basically giving that feeling that he was more scared of under tightening than over tightening. So of course that dampened those prospects of a softer Fed after the meeting. Then we saw that weaker than expected data that really fueled the rally in risk on sentiment, and those that takeaway from the Fed minutes yesterday really cementing that notion and helping that risk on sentiment flourish even more. We've also had the PMIs in the US yesterday actually below expectations or weaker than expected, and we've seen new claims rise, so new unemployment claims rise in the prior week as well, and that seems to feed in line with that higher unemployment reading we had in October. Of course, before the Fed meeting on the 14th, I believe it is, we have the 14th of December, that is, we have another employment reading and another inflation reading as well. So those are going to be key, and I expect that if those come in line with the general feeling of a weaker economy, we are going to see that rally and risk on sentiment really take on effect there as well heading into the meeting. So that seems to be the general feeling with the dollar. In terms of the pound, we do still have concerns about the UK economy. In fact, the UK economy is the one within the G10 that has actually struggled to get back to pre-pandemic levels. We have a deepening trade deficit in the UK. Now, remember, we have a negative supply shock from the energy prices, and this is weighing on the economy. This is going to continue to drag out. We don't see energy prices slowing at any time soon. Of course, Brexit is still a part to blame because of this negative factor, supply shock. So we have these concerns. We have concerns about recession. We do still have inflation at all-time highs. The jobs market holding up pretty nicely, but I think what people are going to focus on, especially the pound against the dollar, is that differentiation between the Fed and the Bank of England. Now, we know that the Federal Reserve has been guiding markets, but of course, if we do still have strong inflation in the UK and the jobs market is holding up pretty well, the GDP reading wasn't as bad as expected, then we may actually see the Bank of England trying to catch up and remaining hawkish while the Federal Reserve starts to undo some of that hawkish sentiment and turn a little bit dovish. If that is to happen, I expect the pound to rally against the dollar, of course. a lot of data has to feed into that nonetheless. And we have seen Governor Bailey from the Bank of England actually remaining cautious in his last meeting minutes as well. So he was really saying that he was scared of over tightening, that markets were way too ahead of themselves with the rate curve suggested. So that is pretty much what we have at the moment. Just one last thing as well from the Bank of England. We've had Ramsden this morning actually coming out and saying that however challenging the short-term consequences on the UK economy, the MPC must take necessary steps in monetary policy to return inflation to its 2% target in the medium term. So Fed minutes yesterday showing that dovish tilt. Bank of England comments this morning showing that hawkish stance. We still have a long way to go. We know the Bank of England has been lagging in terms of monetary policy, in terms of rate hikes. So I think for the next few months, we have the Bank of England still having to go further and the Fed actually starting to consider a slowing down. Whether that's going to happen or not on December 14th and 15th, of course, we have to wait and see. But for now, the general sentiment in the market is that that is the direction we are going in for now. So let's quickly take a look at a few key levels to watch out for before we get into the chart. On the upside, we've got 121.90, that is the 200-day simple moving average. 122.83, that is the high from August. And then 126.60, that is the high from May. And then on the downside, 117.62 is the low from November 17th. 114 is the 50-day simple moving average, and 111.45 is the November 4th low. Okay, so here we have it. This is the cable chart, the pound dollar chart on the Capital.com trading platform. We are on the daily chart here, as you can see. And this is the pattern we've had unfolding since those lows back in September. Now, remember, this was on the back of that mini budget unveiled by the new Truss government. We know that upset fixed income markets. We saw yields spiking in the UK, and we saw the pound really being dragged there on sentiment. So since then, we've actually seen a strong rally, most of that recovery from that financial stability back in the UK. We had the actual budget unveiled last week by Hunt, and he actually managed to provide that stability and that feeling of reassurance in the markets. So that's where we've seen part of that recovery. Also yesterday, I forgot to mention in the fundamentals, but we did see the Supreme Court in the UK actually ruling against the Scottish government being able to do another independence referendum without the approval of the Prime Minister. So that's, of course, helping the pound as well in sentiment. Not necessarily the main focus, it just helps to aid that positive sentiment in the UK assets because of that avoidance of that potential risk further down the line if they were able to do the referendum. So that helping as well. But as you can see in yesterday here, we saw that rally pushing higher, up above 1% to end the day. And we actually have a rising wedge pattern, as you can see, that has been unfolding for the last 2 months or so. And we have come into contact with the upper bound here on the 15th of November. That is when we set the pattern. And so far, it looks like we are trending towards that upper bound once again. But of course, if the wedge pattern continues, expect to see the range in the pair to start shortening even further as we head towards the tip of the ascending wedge. So far, the short-term momentum seems to be upside. The path of least resistance seems to be to the top. Of course, a lot is going to happen with the Federal Reserve, the Bank of England. Now, I have said in the past, and I stick by this, I struggle to see the Federal Reserve really suddenly turning dovish, and especially Jerome Powell. And even though the minutes seem to have suggested that maybe he is an outlier in his thinking, I still think he carries a great weight, and I struggle to see the Fed suddenly turning dovish. Of course, we're going to have the jobs and inflation data to come out from now until then, and that may skew things. But for now, I think, yes, we are going to be riding this risk-on wave of expecting the Fed to be dovish. But I think when the actual meeting comes, I think there might be further risk to the downside, especially on risk sentiment, because I think we might not get as dovish as a Fed as markets are pricing in, and that's going to leave the risk skew to the downside downside, and definitely those short sellers have a good opportunity there to enter the market. So that is my view, at least for now. Of course, as I said, we have to wait for the data, but I do think for now the pound is going to continue to push higher against the dollar. I think it is going to plateau a little bit in its attempt. So as I said, we've seen some strong rallies, and then we've seen a little bit of consolidation to sideways, seeing a little bit of selling momentum coming in and finding some support along the way, and then seeing another push higher. So I expect from here to see another few days of consolidation, and then we're going to come into close contact with this upper bound here. It's also where the 200-day simple moving average is. As I said, 121.90, that is going to be a key resistance, and it's also falling in line with this wedge pattern over the next few days. So that seems to be where we're going to be seeing a little bit of resistance. As I said, it does look like the pound is going to continue to trend to the upside in the short term against the dollar, but watch out for sentiment plateauing a little bit. We've got some data coming out, and as I said, it's not all roses for the pound and for the UK economy. We've still got some risks to come, and even though the MPC members seem to be adamant on increasing rates further, there is a lot of risk to the UK economy, and we also have China seeing further lockdowns increase because of their COVID cases rapidly increasing over the last few days. That is again a risk factor for sentiment, for risk sentiment. So we may start to see that turn in the next few days. So in fact, we may potentially test the lower bound of this wedge before we move higher. So for now, either sideways consolidation, a little bit of a bearish tilt, potentially if those risks from China grow. But nonetheless, the short-term sentiment seems to be higher for the pound against the dollar, as most traders factor in this potential dovish tilt in the Federal Reserve. Whether that's going to happen or not on the actual day of the meeting, that's going to be the key to determining the opportunity there on the day. That is it for today's analysis on the pound against the US dollar. Thank you for watching, and don't forget to subscribe to our channel.